Hey guys, what's going on? It's my weekly video, and I'm going to look at the gold prices in different currencies since the year 2000. And from goldprice.com, you could see that you've seen this bull market in many of these currencies. However, there was a similar trend line, or there was a similar trend in the year 2000. It corrected after a 10 plus year bull market in the price of gold in many of these currencies. You finally saw a correction. And if you want to notice which currency in 2013 had the least fall in the price of gold in 2013, it was the Japanese yen. Right around the time where they announced that, hey, Abenomics is going to begin, is actually late 2012. And once you saw the yen starting to weaken, you started to see the Nikkei go up, but in 2013, gold prices in yen actually went down. But the next year, you could see that which currency had the most appreciation in the price of gold. It was the Japanese yen. Now this year, it's actually the euro. And that makes sense why gold prices in euro are going up. And that's because you've seen the euro versus the dollar. It's gone down over 30% from year to year. So that explains that fact. But if you look in the United States, you can see that, hey, it's only 1.3% increase thus far. Japanese yen, gold price in Japanese yen, not so hot, 0.8%. But let's look at what's going on around the world. We know that a lot of investors worldwide are scared of the potential events that may occur in the future, such as in Europe. We know that the Eurozone may implode or countries may leave. So that's why you see citizens probably buying gold, and that's why you see an increase in the price of gold up to this month. Now, if you look at the Swiss franc, minus 2.2%, you have to remember that they unpegged from the euro. They still do have a peg, but it's not the peg that they had for the last 3 years. Now, this gets to the point that, okay, if the Eurozone implodes, how will investors react? In my opinion, you're probably going to see gold in terms of euro, that's going to go up. In terms of dollars, at best, I would say that it would be flat or maybe even negative again. Last year, it only fell down minus 1.5%. But you have to remember that the dollar is a basket of fiat-based currencies, and the dollar has 58% of the euro. So that being said, using mathematics, you could say that, okay, if the euro plummets later on this year, I mean right now it's gone up in a straight line, it's gone down in a straight line, so we need to see a dead cat bounce, and we're in the process of seeing that, in my opinion. So in terms of dollars, maybe this year may not be the best year for gold and dollars again. But if you're looking at other foreign currencies that, in my opinion, are going to experience problems, it's going to be the euro. It's going to be the Japanese yen is going to have problems. Now the question is, how are they going to devalue their currency? Are they going to devalue like they did in are they going to devalue like the British did in 1931? And as a result, hey, gold in terms of yen is going to go up, the yen purchasing power is going to go down. Are we going to see a similar situation to how everything unfolded in the 1930s, right? With the euro crisis, the sovereign debt crisis. Is that a similar tale of what's going to happen now? Now that's going to be an interesting take. So in terms of other currencies, it feels that minus the US dollar, that gold may be a hedge against government collapse. Now in the United States, we're the best out of a rotten set of fishes out there in the sea. And as a result, we could potentially see lower gold prices. But then people are going to lose faith, and then investors, in terms of dollars, may be filing into gold. Probably at the last minute, and then you could see that spike. But anyways, this is just an interesting take, and just as a disclosure, I plan to diversify my holdings in terms of gold in another currency besides the US dollar. Just want to get that out of the way. So I don't want to make sure that people perceive that, hey, there's a conflict of interest, why are you talking about this, this and that. Just want to get that out of the way. So anyways, guys, what do you think? I mean, if you look at all the currencies besides the US dollar, and if you want to not look at the Swiss franc, you could see not decent returns, you could see more than a 5% return from an annual change. If you want to look at Australian dollar, Canadian dollar, if you want to look at the Eurozone, or in Europe, if you want to look at Britain, Japan, not so much this year. But anyways, it just seems that if you want to own gold, it just seems that there are certain currencies to own it in, rather than US dollars, for the interim or for a trade. I still believe that loss of confidence is going to make people get into hard metals. That's my ultimate thought process. I could be wrong, just wanted to say that. But anyways, guys, what do you think about this? Let me know your thoughts. Talk to you later. Bye.